A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that.
The BIS itself, I mean, they are very public about this. There's nothing happening. This is not happening in the shadows. They wrote this paper, Central Bank Digital Currency, Information Security and Operational Risk to Central Banks. And if you click on the PDF, you can read the whole thing. It's an interestingly crafted paper. I just highlighted a few things. The first thing is, like, I found this interesting, the first sentence in the executive summary, the second one. Just like physical money, a CBDC is a means of payment denominated in the national unit of account, and it is a liability of the central bank in a particular jurisdiction. So one of the things I think that's important about CBDCs is that they are nothing inherently new to central banks. It's just another asset category. What is truly new is that this asset category from the central bank is not physical cash, but digital cash, and digital cash that is available to you and I. Because right now, the most important thing to understand about central banks is that they create two kinds of money. One type of money is only for retail banks, and that's called reserves. It's like the most epically fail-named thing in the world, because reserves has nothing to do with reserves. Central bank reserves are nothing but deposits that member banks have at the central bank, right? And they can use this reserve money to settle trades among each other, right? When the Bank of America and Citibank, they want to settle a trade among each other, they need an intermediary, and that's the central bank, right? And then they just swap some of their reserves and done, and fine. You and I, we have no access to reserves because we are individuals. We have access to the second type of central bank money, which is cash. I mean, the good old thing in our wallets, right? This thing here, to us, I have the Japanese one, of course. This is an asset for me, but it is a liability to the central bank, because the central bank has to give me 1,000 yen for this. Of course, this is where the circularity of money kicks in, because this is 1,000 yen. But this is the central bank promising me the value of 1,000 yen, although it doesn't promise it in gold or anything. It just promises it in the same thing. But I'll show you something. I didn't destroy this money. I just destroyed the token that it is made of. I can go to the bank or even just to the Japan Post Bank and they give me a new one, because I didn't destroy the value. I just destroyed the paper. And this paper is from these $10 here, 1,000 yen is from my central bank. Now the thing with the CBDC is that if the central bank does it in one way, it would be direct access from us to digital money from them, which at the moment doesn't exist. So that is the novelty of the CBDC. But what this paper also says is that there's different ways of giving access to a central bank made digital currency. Here they have a little world map that shows like who is in what kind of research stage for doing a CBDC. And you can see the US is here in stage retail research and wholesale project. I mean, everybody in the world, a lot of countries in the world have some form of projects of creating these CBDCs, but they're in very different stages. And one thing that's important is here that the BIS says that there's different design choices. A retail CBDC, there's two kind of CBDCs, retail and wholesale. Retail would mean, is it here? A retail CBDC can be seen as a sort of digital banknote that can be used by individuals and businesses, including merchants, to pay each other. A wholesale CBDC is restricted to use by financial institutions to settle trades in financial markets. In either case, it would have the full backing of the central bank. What they mean with that is really that you have two design options. Either you make this CBDC available for everybody, you and I, directly from the central bank, or you make it available just for, retail banks, a more direct access than using their reserves, and make it possible for them then to also, like, let's say, buy financial products in financial markets. And then these retail banks, they can give us their own digital money, as they already do, right? We already have digital money from retail banks. You and I, we hold deposits with them, right? And most of these deposits we can access through our smartphones, which is already a form of digital money. The process of creating CBDCs, or the way that they can be created, what the BIS says and what also other central banks are saying, is there's different ways, different designs that are possible. And the design that you and I, we are most worried about, would be a very centralized one, where everything is basically controlled by a central ledger, let's say by the BIS, and then everybody is being surveilled by this thing. But that's really only one of the different choices that there are. And what the paper says is, like, even wholesale CBDCs, where, you know, we have a distributed system is possible, is around. Here's another one. The fact that CBDCs are a claim on the central bank clearly differentiates them from existing form of cashless payment. Because our cashless payment that we use at the moment are claims on retail banks, not on the central bank. Such as credit transfers, direct debits, and card payments in e-money, which are liabilities of the issuing institution. They are also different from other types of digital money in the form of crypto assets, stable coins, and other digital assets. So the BIS paper contemplates this, how this works, and it also then goes into, you know, the different ways it could be done. Either a direct distribution system coming from the central bank to you and your wallet and my wallet, a hybrid system in which we can get a little bit of their assets, but not everything, and an intermediate one in which basically only retail banks have access to CBDC. So that would then be the wholesale model. And they study that quite. It's funny how they do this. I find so the different architectures that are possible, and this is really just explaining what can a central bank do? What are the different possibilities of giving direct access or indirect with other intermediaries and digital solutions in between? So this is very much a concept paper to study what is possible. Something that concerns us also is, of course, the technology that's being used. A CBDC could run on a conventional, centrally controlled database, the central ledger, the thing we are afraid of. Centralized ledger technology, CLT, or be fully or partially deployed on a system based on distributed ledger technology, a DLT. And the DLT in this sense is much more like Bitcoin, right? Bitcoin doesn't rely on one central database. Each coin and each wallet user has the copy of the database for themselves, and that's then distributed across the network, and that's how you keep track of the trades, of the transactions. There's a distributed one. A centralized one is really one where, everything is in the hands of one thingy. Your bank, everybody's retail bank, they have a centralized system because they're the guys with the big spreadsheet. But once they want to settle trades among them, they need to go to the next bigger spreadsheet, which is the central bank. The central bank then keeps a spreadsheet for all member banks, and the BIS keeps a spreadsheet for all the member central banks, and that's how the pyramid works. But it's a distributed pyramid even in that kind of scheme. I went also to the Swiss National Bank to see what they produce, and they also have they also produce papers. I mean, the interesting thing is this is all out in the open and can be looked up by anyone. How to use a central bank digital currency. They produced a paper back in 2021, so in March, so 3 years ago, and this paper is really, really interesting in the sense that it also lays out, can be implemented. They also talk a wholesale and retail, and they also talk about risks, you know. I found this one here very interesting. Here, transaction privacy is important for 3 reasons. So if you design a CBDC, the Swiss Central Bank says, first, it protects users from government scrutiny and surveillance abuse. Mass surveillance programs are problematic even if people believe they have nothing to hide, simply because of the potential for error and abuse, particularly if such programs lack transparency and accountability. So these people are very much aware that central governments might abuse this technology, and they're actually discussing this.
Thank you so much for sharing that. That was really interesting, and I think it just goes to show that they are truly operating around a risk-based approach. So they're aware of what might cause concerns for for users and why they may not want to use it. So they're going to kind of come out and say, hey, we're going to address those issues. Here's how we were going to do it. Those concerns are valid. And if we are going to use CBDCs, then we need to make sure that they are being actually addressed by central banks and not just kind of brushed to the side. But
Yeah.
of course, CBDCs are very controversial anyway. So I think for anybody to feel comfortable with them, central banks will have to do a lot of work to address privacy and security concerns. And what stands out to me the most is the fact that central banks own these digital currencies, so they effectively will be able to track who owned the token before, who's owning it now, what transactions that person had during the time of their ownership. And of course, all of the data is something that we currently consider private. So that in itself, I think, is something that would be absolutely new and extremely uncomfortable for the majority of us. Not too long ago, the BIS actually developed a framework for CBDCs, and according to the BIS, a central ledger, just as you just mentioned, will be created for the world central bank digital currencies. And so for the transactions to be successful, they're saying that all financial assets would need to be tokenized. And then they go into the explanation of what a token is. And they say a token is essentially a combination of two things. It is a combination of information and rules. And so by information, they mean basically what the asset is, where it comes from, previous owners, everything that you and I would consider private information, right? And completely irrelevant to money. And rules. And so the rules would define what an asset can and cannot do. Then the BIS writes that tokenization involves a new concept of a conditional performance of actions. And so basically that tells us that for B to happen, you have to do A. So there has to be a condition. And then all of a sudden the paper is published and all of a sudden we see Citigroup and JP Morgan announce their new services where they enable business clients at this point in time. Individuals are not able to, but businesses can go ahead and tokenize their traditional assets. So the system's already in place, and I think it is quite fascinating that this process is moving along so quickly, and these programs, tokenization services, are rolled out by private banks, by the biggest banks in the world, Citi and JP Morgan, essentially within a matter of months. Next, I would like to play a video of the general manager of the Bank for International Settlements. The man's name is Augustin Carstens. And so in this video, he is admitting that CBDC will grant central bankers, quote, absolute control over how digital cash can be used and the technology to be able to centrally enforce that. So let's watch the video, and I would love to hear your thoughts on this.
We tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
My take on the one hand, I would like to see the rest of what he says in that presentation. On the other hand, the part that he is saying is quite scary. It's quite scary. The idea that the central bank would then be able to control and to understand what things are being bought, what kind of things are being bought by each one of us, and that you can build this conditionality. Of course, that what he describes to me is like one of these ways in which the BIS paper says this is one way to do it, right? So he says this is the way that he apparently preferred. But then that's exactly where we get into the weeds of how much control do we want to give centralized institutions over our purchase decisions. I hope that more systems will go into a way where they trust individual citizens and less of centralized, like kind of a Chinese social credit score type of approach, which is a dystopian future. The thing I would like to say is that from my perspective, like reading these papers and trying to understand where the discussion is among central bankers and also like among the researchers, we're in a decentralized moment at the right now, where different central banks and different retail banks in different countries are at different stages and they are trying out different technologies. And one more option is that also in the future, that's one thing that the BIS paper talks about, suddenly we might have something like Bitcoins that actually work as a means of exchange, because Bitcoins are very good at creating value, but then they are not used, right, for exchange. So they really lack large spread adaptation. But this could happen. It could happen that suddenly out of the blue, something comes along and we stop using Japanese yen and US dollars and we all use the new thing. That's if it emerges. And that's also something that then induces this kind of central bank frenzy into research of what they can do and what can they offer to the general public, because at the end of the day, it's still up to us individuals if we want to use it and adopt it or not. And if they take away cash, for instance, I mean, you just increase the risk that somebody is going to invent something that's going to act like cash, and that's not under their control. So that's why, like, these 8 billion people on this planet are still a system, a network of people that doesn't necessarily work under a centralized roof. Although the centralization is, of course, the wet dream of a couple of these bureaucrats in different positions. Most of them, I would say, though, they sit in government much more than in the central banks. Central bankers, again, are much more about finance and risk and so on. So I would hope that what he says is not what's going to come true, but that we will have a decentralized and private system in the future, and that people also won't adopt it if they don't want. So what is happening in the US is still, at this point, an experiment, right, with these retail banks. So we're still in the experimental stage, which is, I mean, at least that. The Chinese, they already have a very quite integrated, not a CBDC, but an integrated system with a social credit score, which is quite scary. And I remember very clearly, I was at a presentation by one of the 3 governors of the Swiss central bank when she came to Tokyo a couple of years ago, 3-4 years ago. And when people talked about CBDCs back then, she was very negative about them. She said, digital currencies is something for the private sector. We don't engage in that. That's not our business, because we provide physical cash and we provide reserves. That's what we do. She was very negative about it. And by now, this seems to have changed, also due to the peer pressure, that, you at least need to engage with it somehow. So we'll see how it develops. It's definitely in a system under construction right now.
Well, it's very fascinating that the Swiss central bank actually had a negative perspective on this at least a couple of years ago, and now, of course, we're seeing that change somewhat. There's quite a bit of opposition here in the United States, and they're trying to introduce new laws to essentially ban any form of CBDC. So it remains to be seen whether or not this will come to fruition. But Pascal, thank you so much for your time. This was a great conversation. I really enjoyed it. And I truly appreciate you sharing so many interesting insights with us today. I hope that you come back.
Thank you very much, Lena. And I just also want to say that I watch your channel every time you give out a new video, because you're doing great work in the finance space. And also I saw that you recently also ventured into geopolitics, which is something that I follow even more. Thank you very much for your work. And we have to keep collectively thinking about this stuff. So I'll be happy to do that again, and see you next time. Thank you.